good afternoon. What a day it was. It is Monday here, the 7th, 4:15. Michael Loftus, Loftus Wealth Strategies, Wealth and Wisdom TV. Going to go over a few things today. Obviously, lots of volatility, oil a big story, and some other topics. So let's get right into our next Straight Talk. All right, again, Monday afternoon. Here Okay, so first up, Brent Oil. This is a stock charts program we use. Obviously, at this point, we do not have the prices up to date. Okay, not sure what's going on here with my backdrop, so I'm going to fix that here in a second. But basically, through today, we are looking at about 123. We actually hit some pretty big numbers yesterday. 130. We'll see what happens. Okay. So I mentioned about the Brent Oil. Okay, and what happens there. So if we go back to the Bretton Woods. Bretton Woods was after the war, came up with basically in the world, all the world powers came up with some different pricing options. And each time from 47, here you go, 47, 53, 57, 69, any time that we've had any type of big rise in oil, it has in fact been followed by a recession. Okay, now after that, hold on, I got a lot of stuff going on here, too much. Okay, so then you take a look here, Bretton Woods ended. Okay, that's when we went to the gold standard. And again, take a look, right? 73, 20 to $60. Love to see $60 right now, right? 79.80, 60 to 135, kind of where we are today. Recession, 1990, 40 to 80, recession. 2000, 98 to 2000, went to 55, not too bad. But, of course, we had a recession there as well. 08, 09, we know about that, the GFC, right? The Great Financial Crisis, 80 to 180. Wow. Some people right now are calling for 150. I even saw a 200 number. 2018, 40 to 80. There's our pandemic. Okay, tiny, small recession. And then right now, we started at $20 back in 2020. We're at 122 after hours, maybe a little bit more than that. So yes, that is a bit of an issue that high oil prices is a very, very good leading indicator. Okay, so what do we have up next here? Let's talk about what happened in the markets today and take a look at our charts. Ugliness everywhere. A couple things. If there's one thing we look for, we don't generally crash, okay, until we're in oversold conditions. We're not quite there. We were there over when this all started, but we're not quite there, so we'll see what happens. Okay, but the big thing, as I said, here's 42.21. This is the Fibonacci's. Okay, we broke that. The last time we broke it was right here, and then immediately went back up. Okay, so what am I looking for tomorrow? Are we going to have a follow-through day as far as going down? Or we're going to have a bounce back like we generally have? Now, that being said, down the bottom here, I have a momentum indicator. We did cross over here. The VIX is in the ugly bucket here, okay? When we get above 30 and above 35, non-investable. Really got to be careful here, okay? So this chart is really broken down. Definitely concerned about what we see. So what happens if we stay below? What is the next level? When I take a look at the next levels, I then restart the Fibonacci's from the low of 2020, okay? So our next level of support is about 38.21 if we continue down this path. If, okay? Now that being said, if you watch my most recent full video, yes, I'm talking about the charts today, but definitively we were calling for a slowdown heading into the second quarter. You've got slow growth. You got the Fed raising rates. Okay, that is a recipe for disaster, right? That's our cycles that we look at all the time. You can see that in our latest video on our YouTube channel, okay? Now, at that time, we're talking about inflation rolling over a little bit, but now, because of this crisis, you obviously have inflation picking up. Thursday is going to be real interesting. Last read was 7.5. I would not be surprised to see a 7.8, if not 8% on that inflation read. So we've got high inflation, slow growth, and the Fed is way behind the 8 ball and has to raise rates, okay? So you're going to see raising rates, and how's that going to impact a market that is already fragile? Of course, I will say to be determined, okay? By the way, we are not alone. Here is the DAX, the German DAX, okay? They've already gone into crash mode down about, actually just about 20%. So you've got a pullback 10%, and then you go bear when you go below 20%. Let's see what happens there again, but they're ahead of us. A lot going on in Europe right now, so continue to watch that. Now today, the NASDAQ got beat up big time, okay? 3.62 was down today. This is the Vixen, which is the volatility index for the NASDAQ. And we're looking at a big number right there, spiking. So the NASDAQ has really been hurt bad in this cycle. You don't want to be in high beta, high tech. We started selling back in December, been fully out of tech for quite some time. That has really helped us here to weather this recent volatility. And when I say recent, really the last month, it started getting a little bit rougher. So the question is, in our setup, where do we go from here? How do you manage risk, okay? First off, if somebody's doing something today, you're a little late, right? So the market now is down, I call it 13% year to date, so we have a while to go before we go bear territory. But a lot of consistent bearish signals right now, okay? So some of the things we need to look at, I just did a video recently on how to hedge market risk. Again, on our YouTube channel, check that out. Talked about cash, right? Cash is king. It's a non-correlated asset, so we've got about 20% in cash right now. Bonds, okay? Bonds have gone up, all right? But as growth slows, you expect them to roll over, and then you also have this flight to quality to the bond markets, okay? So have to take a look at that. But on that flight to quality, a little surprising today. Bonds were up a little bit. Expect a little more move to the downside, but bonds is still what we believe a good place to go, okay? So real quick, we have a question here from somebody. You guys were early on the commodity grade. So here's my opinion on commodities, okay? We entered cycle 2, okay, in November of 2020. Growth goes up, accelerates, inflation goes up. When we made that call, people think we were crazy. We were in lumber. We got into oil early, natural gas, you name it. We had all kinds of commodities. Now, again, I thought that inflation was going to roll over. Little wrong on that call, but we did get back in about 10 days ago on 2 key holdings, which has really helped us here in the last couple of days. Now, when you look at the commodity index, it's up 34% the last month. So in commodities, you got to be careful. I could bring up a chart here. A lot of them have gone really vertical, so you have to be smart about your entry point. The next area, in order to hedge yourself, help you in this market, gold. Okay, I've been talking about this for a while. Again, in cycle 2, we short gold. Now we're long gold. It's been a great move for us. This shows you that trend line have had a definitive breakout. Nice day today. Still have a long way to go. Gold is a great hedge, okay? Some people say inflation hedge. I'm not a big believer on that. I think that right now gold, we also added gold miners last week on a pullback. So we're between gold miners and gold. We've got about a 10% position, and this has really helped us last week where we had actual good returns, and today we actually were flat. So in our models, which has really helped us manage risk, and that's what we're trying to do right now. Okay, this is not a time to be overly aggressive. We're managing risk. Right now, when I look at the total downturn year to date, we've eliminated about 80% of that with our process, being a little outside the box here, and then also with our cycle 4 call. So as we go forward, what are we going to do? Still have 20% in cash. Going to look to continue to deploy that in the bonds. If we have a pullback or consolidation on gold, that'll be another place I'll look to add to. Same with gold miners. Silver is setting up pretty nicely. Might add to that. Palladium's gone through the roof. Forget that. Uranium, everything that's going on. Uranium might be something to look at because we might be going back and using. I'm losing my train of thought on that one. Someone can probably throw me a question here, but we're looking at that as well. So probably deploy some of that. We're out of our high risk assets right now. Like where we're positioned, and think we go lower. I'm not a predictor of the markets, but we had that call with our cycles. What's happened with this geopolitical issue? It has just made it go along a little bit quicker. Well, a lot of it quicker. Michael Loftus, Loftus Wealth Strategies, Wealth and Wisdom TV. Any questions, let us know. Shoot us a comment. We'll get back to you. Thanks so much for watching. See you next week.